Hello, hello. Welcome to the Five Talents Podcast. I'm your host, Abel Pacheco. I interview the top commercial real estate investors and industry experts so you can learn from their experiences. So if you're an investor, a high W-2 earner, or real estate or tech sales professional that wants to invest in real estate without having to manage properties or leave your day job, then this podcast is for you. Or if you're already investing in real estate, but you're doing it part-time and you want to become a full-time multifamily or full-time commercial real estate investor, this podcast is for you too. You're going to learn a ton. You will learn from real-life multifamily investors and other professionals in the industry. They're going to share their blueprints for success, and I'm super excited that you're here. So I hope you enjoy the show. Hello, hello. This is Abel Pacheco, your host for the Five Talents Podcast. We are super excited today because we have another amazing guest, Mr. Keith Blackborg. What's going on, Keith?
Hello. Thanks for having me, Abel.
Yeah, man. I'm extremely excited. I'm humbled. I'm appreciative. I'm happy that you're coming to join us on another amazing show here because you've got a ton of value, a ton of insight and knowledge to help a lot of our listeners, guests, and those that are trying to get to that spot of financial freedom, or as you would put it, work optional in 3 to 5 years, man. So I'm excited to have you. Well, thanks for coming.
Thank you.
Yeah. So Keith, for those that don't know you, I'd love you to give us an introduction, but I'll drop a couple of nuggets and a couple of gems because, when I first met you, we got to meet at a real estate seminar and conference, and I forget what city we're in, Miami maybe, but
Miami.
It was Miami. And I'm like listening to some of the insights you're giving. I go, oh, what do you do? And he said, well, I got a few letters behind my name, but some of them CPA. And when you started mentioning that you're the owner of Financial Journey LLC, I was like, okay, what is that? What are you doing exactly? And just to hear that you coach, help others, you have that mastermind to really help, people on their financial freedom journey, or as you put it, work optional in 3 to 5 years, that helping business owners and other like-minded, investors really establish their strategy and their tactics and the plan to create that for themselves. Man, I was like, dude, we definitely need to have a conversation. So I'm excited. You've been a CPA for a number of years, so you're not just giving advice, just off the cuff. You're well-trained, educated, knowledgeable in the spot. And then now you also have done some syndications on your own, and you also do help others. So you've got a great background. And let me turn it over to you for your introduction. In your own words, tell us who you are and what you do, and we'll start the conversation here, brother.
Sure. So I am originally from California, but now I live in Texas. Like a lot of Texans, we're from New York or California. I started my career at Deloitte & Touche, big four accounting firm, learned from the best. In time, I moved to Dallas, started buying rental houses in 2010 at age 25, was flipping, wholesaling. My wife ended up running that part of the business. And then in time, we transitioned from residential rental houses into active and passive investments in hotels and apartments. And then I also had a CPA firm focused on high net worth real estate investors. And so I worked a lot with the nationally known syndicators in the Dallas area and a lot of the best of the best. And so I learned who the best guys were. Along the way, I was director of acquisitions for a hedge fund, buy 875 houses for them. And so all of this, as much financial success as that might sound like, I was a millionaire by age 30. Like I had a lot of it. My personal life, though, kind of sucked. So I had a CPA firm, 400 clients, had built up a team of people, and these aren't simple tax returns. These are 50, 200 plus partners in a tax return on a $30 to $100 million property per tax return. And so these are big numbers. And so these are complex stuff. If I ever wanted to get on a vacation, I could never get away from, I loved my clients, but if a VIP client called me and needed help closing an 8 or 9 figure deal, or there was something they needed from me as part of that, I felt like I had to answer that and be there for my clients. And so in time, 2016 rolled around. I thought Hillary was going to get elected. I thought the market was going to crash. I was wrong, but I ended up selling out of a lot of active investments, transitioned my money to some clients. I knew who the best were. And so I knew the guys who were consistently doubling their clients, their investors' money every 2 to 3 years, put money with them. That went really well. And then just left and traveled the world. So I went to every continent except Antarctica over the next 2 to 3 years. My wife and I just traveled. Along the way, we got the best souvenir you could ever possibly have. That was my now 2.5-year-old. And so
Yeah, yeah, yeah.
um, yeah, so excited about that. That changed our lives. Kids will slow you down. As part of that trip, we were looking to see where we might want to live. Ultimately, we ended up in Dallas because there's business opportunities. Family lives here. Having somebody who can watch your kid is apparently really important and allows you to actually get away. So that was a life-changing decision. And at the end of all that, travel at some point starts to become lonely. There's not much of a community. It sounds exciting, especially if you've never done it, but there comes a point where I was wanting to find fulfillment other places. And as a part of that manifestation, that passion to help others, I started Financial Journey as a hobby business, really to help others reach financial freedom. And so I'm not the guy to go out and help somebody create the cards that has never owned a business, never done real estate. I'm not the guy to get you started on that. I'm the guy who already, when you already have some wealth, you already have a business, and you're looking at the most efficient way to play your cards from a wealth, tax, legal perspective. How do you build that portfolio of alternative investments? I'm the guy that shows you how to take your existing stuff and maximize it, do even more with it, and then have fun along the way. So having a community of people that likes talking about this stuff. Oddly enough, I actually like talking about taxes, and there's a ton of crazy stuff you can do from a tax perspective that most people don't know. I consider myself more of a tax strategist. There's a ton of great wealth opportunities that are out there that people just don't know how to do. So I love identifying the best stuff and then working collaboratively with other people, where other community members who are trying to do this stuff and work together to get maximize the results. It gets lonely at the top, so having a community to run with makes it more fun for everyone.
Yeah, yeah. What a background and what a story. What a good start to I think this conversation. So I wrote down a few notes. One of the ones that I think I want to start with is so real estate investing podcast, right? So you started investing in real estate when you were younger. So I heard that, and then I heard you went on to lead a business as the owner, business owner, but very much felt your stories felt similar to like a hardworking employee that was you're tied to the business. Maybe
Yep.
business owner, maybe you didn't quite own the system, but so tell us how you got into real estate, and then how did you start your firm, and what was the decision point, and just maybe a little bit of background there.
Sure. I heard Robert Kiyosaki speak at an event,
Of
and that
course,
was there
yeah,
was a local education group, Lifestyles Unlimited in Texas. They're big in that area. My
yeah.
wife in time ended up working running their financial freedom program there, and so that certainly helped us meet people in time. I've always been probably the most annoying staff person to a boss you could ever have, in that I would go try and look up answers, but I was consistently asking questions, always asking questions. And so there came a point a few years in where my bosses who had been doing this 30, 40 years, who were partners at at a large CPA firm, Deloitte, could no longer answer my question. And they kept telling me to go find out, figure out my own answers, because they didn't know anymore. We were in complex enough stuff that I was like, okay, I'm now at the point where I understand this stuff. And then
Yeah,
I'm doing real estate.
yeah,
So building a practice around doing real estate when you're already living and breathing it, people didn't just come to me for the tax strategy. They also came to me because it's like, hey, I see so many tax returns in this specific business. Your insurance is too high. Go talk to so and so. They're going to cut it down. Go protest your property taxes. You can do this better. Go talk to and I started connecting people. And so I added a ton of value in different ways. And so my best advice out there is look at all the different ways you can add value.
hmm,
And in time, if you can learn how to communicate that value and charge for that value, you can get paid really well for what you're doing once people recognize the value you're able to bring.
Got it. Yeah. What a great insight. Just that no matter what business, no matter what industry, no matter what you're doing, y that lubricant for the human interpersonal relationship is helping someone else value, providing them value, not because you're expecting something. It's just you're doing that, and now people value it. The literal value. It's like, man, it's your advice just helped me, avoid $1 million tax situation, or it helped me increase, my NOI by 10K a month, which, at a five cap or whatever becomes a 500K valuation or whatever the is. You're trying to provide somebody else value. And now, that definitely helps you in your personal and your work and your entrepreneurship journey and investing and different networking. So yeah, what a great start. And Kiyosaki, obviously, that's a good one. We all kind of, many of us on this show have either seen him, heard him, read his books, one of the two, and then all of a sudden we're all real estate, right?
Yeah, he's a great guy. I saw him actually at a conference in May, hung out with the guy for a little bit.
Yeah,
Unfortunately, he's getting a little older. His
he
mental
is.
faculties aren't quite where they used to be. Um,
Yeah,
but for me in my business, I feel like I'm a terrible salesman. But if I can lead with adding value,
yeah,
then and people understand the value, then getting the best source of me ever growing has always been referrals.
yeah, yeah. Great insight. And there's another word: referrals. Ask for them, provide them, help someone else, and you will lubricate that process. So you became a business owner, 400 clients, multi-million-dollar tax returns, many multiple, hoops and things to learn about yourself and then help others with. But you still couldn't leave, quote unquote, work sometimes. You said, hey, man, a vacation time, and yeah, you got a big client and you're going to help them, and you're tied to the work, right?
Yeah, actually, it led to quite a bit of conflict in my marriage.
Yeah.
That and there was some other stuff going on, but we were at a rough point between I really felt more married to my job, and for a little while there, divorce was considered.
Yeah.
So I knew I had to make some changes, and I didn't want to be married to my business the whole time. And that's why for me, I will talk about wealth and taxes, but
Yeah.
really the life component of it is so much more important. Money at the end of the day, I can make more money. Maybe I can upgrade my house, upgrade my countertops. I'm very comfortable where I'm at. Now, I don't really
Sure.
need more stuff. What I really want though is more relationships to do life with,
Mhm.
and being able to help other people, knowing that other people are able to experience life to the
Yeah.
fullest. That's so
Yeah,
much more
man.
fulfilling for me than just making another $1 million.
Yeah, brother. I know you're a proponent of like shifting from building to living, right? Building the business to exiting and enjoying freedom. So maybe you can touch on this mindset a little bit for us, and you've seen many multiple different businesses, entities, exits. Give us some insight here, bro.
So first and foremost, with viewing wealth, I want to view wealth as the business. So all the time you're going to pour into a job, an active business, your investments, your personal finances. Those are all divisions within this overall umbrella. The parent company is your wealth business. So you serve or you grow the active business that you're putting your time into, but there comes a point where it might make more sense for you to start putting your time and energy into growing your ROI. So if you're able to get an amazing return on investments, let's say 30% return on your investments. If you've only got $1,000 to invest, a 30% return is going to give you 300 bucks. But if you got
Yeah,
$1 million and you're able to get a 30% return, then that's $300,000. And maybe in that example, $300,000 is more than what you're earning from your active business. So in time, you're transitioning to you're focusing on growing the portfolio of investments and maximizing that ROI. And by viewing your overall wealth as your business, you can start to see it for what it is. And then you're giving your personal finances fit within that, but it kind of gives you a more comprehensive picture of that business. And what I really like to show people how to do is how to make their wealth business, how to grow it over all that top level picture and make it more passive and really use your wealth business to fund your vision. What is it that you want? What's really going to bring you happiness, and build the wealth around that? often I'll get to people who are in their 60s, and they could have reached financial freedom, reached work optional when they were 40, but they just
Oh
kept
my
building.
gosh.
They never had a clear
Ah,
why.
oh my gosh. Yeah, yeah, yeah. Man, well, and you were able to retire at a pretty young age, 30 in your 30s,
32.
if I 32.
2 years longer than I needed to be. My wife kept reminding me. I reached the point I wanted $10,000 a month in passive income. I did that before I was 30, and I just kept going. My ego
Yeah,
was part of that,
yeah,
and so
yeah,
we had to have a come to Jesus moment
yeah,
as part of that.
man. So, help somebody here, right? It's let's maybe a couple examples. The first example, I'm a W-2 employee. I'm in tech, I'm in sales. I got a good title behind my name. I'm making 200, 300K a year, but every year I don't measure my net worth. I don't look at my personal financial statement, and I'm just making money and spending it. And I don't know how people get to a million, 2 million, $5 million. Like help them a little bit with the mindset, and then maybe a couple of easy things that we should be taking notes on right now.
So first and foremost, I want you to align your spending with your vision. So some people will really go all in like Dave Ramsey with budgets and stuff like that. There's maybe a time and place for that, but really, if your vision is to be work optional in 3 to 5 years, within 10 years, then you need to start systematically putting money aside for investment, an
Mm,
investment savings account. And then as part of that, you start finding the great deals like through Abel, where there are great investment deals. Find those deals, invest with them, and in time, you're pulling money systematically out of your work, whether that's owning a business or as an employee, putting it into these deals. And at a point in the future, you're transitioning actually out of your work into your wealth business where that becomes your focus. So do you want to remain passive and only invest passively? Or maybe there's an opportunity where you think, hey, I know I want to learn about syndication. What are the best opportunities in syndication right now? I will say apartments right now, there's a ton of people. It's still can be a great investment. There's a ton of people teaching apartments. So if you were to go, maybe there's another asset class even beyond apartments that you want to do. There's a ton of things you can do in real estate. So start, what's your competitive advantage? What are you good at? What is your network and resources? What financial resources do you have? What opportunities in the market align with your competitive advantage? And then as a syndicator, you can start pursuing them. And
yeah.
then there's, of course, investment and tax strategies that complement whichever way you're trying to go.
Cool. Well, we're definitely going to break in to the tax strategy in a second, but let's hit this one more time, right? So what I heard was um, part of this, anyways. If I'm trying to get out of this rat race, even if I'm a business owner, because there's a lot of business owners that they work even harder than the W-2 employees, even more hours, even more nights and weekends because they're the owner. So if I'm trying to get out of this rat race, I need to be able to pull my money out of the business or my W-2, and I need to systematically invest it into something that's going to provide a return when I'm not working. I made my money work hard. I'm sorry, I've made my money working hard. Now I've got to make my money work hard for me.
Yes, and part of that, getting clarity about how your business serves your wealth business, your active
Okay.
business. Are you growing? Is it simply income? Are
Yeah.
you growing equity in the business? Is your business something you can actually sell? If you're not sure, there's actually ways. This is what I work with clients on, is putting systems in place and growing the business in such a way and looking at the financials to actually make it worth something or maximize the value of a sale. So you're either able to exit and sell your business for something significant and transition more of that portfolio to that portfolio of passive investments, taking money out, or you turn it into something more passive where you just have a board level role in your active business and you're no longer in the day-to-day operation.
Yeah. Yeah. I love it. I love it. That's good stuff. I think it's freeing for somebody right now that may not have been thinking about this, and maybe they've heard it a many multitude of times, but something's just going to finally click, which is if you're the business owner and you don't have systems in place, then you're working harder than you need to, And if you just spend a little bit more, invested a little extra time to create those systems and put the processes in place, not only will your job become easier, your day job or day business ownership, but also the value in your business goes up because you can now exit and somebody else will value that higher because they don't have to put time, effort, and energy. They're just going to own a stream of income as opposed to another job, right?
Yes. If your business is really a job, you're going to have a tough time selling a job. If your
Yeah,
business is a true business that operates without you, then you have something of some significant value. And the more you can grow, the multiple that you can sell it on goes up exponentially.
man.
So $1 million net revenue business per year versus a $10 million net income business per year are going to sell on very different multiples. The $10 million business is going to be exponentially worth more than the $1 million net income business.
Yeah. All right. Well, it's good stuff. It sounds like you help coach a lot of investors, business owners, high net worth, just individuals, not only just on this tax strategy, but hey, this is the machine that it creates the seed. So let me help your machine get even better. It'll create more seeds, and we can go plant those seeds in more spots. Is that
Yeah.
is that what your mastermind and your coaching is a little bit about?
Yeah, that's part of it. Yeah. It's I really enjoy working with people on them and seeing the light bulb moment and how their life can change and what's possible. So
Yeah.
many people feel limited that they have to do things a certain way, that they have to be in their business for these amount of years. And frankly, often we can take their existing hand of cards and say, well, why don't you just do this or that? And watching the light bulb moment where they realize they don't have to work 60 hours a week, or maybe they're even working 30 hours a week, but they realize they don't have to possibly do anything anymore with a little bit of time and energy. Their life could be so much better
Yeah.
just with a little work. And that's why I love talking to people and seeing those light bulb moments go off. So fulfilling.
Yeah. The wealth business. I've heard you say many multiple times. I'm really taking a few things from you. I'm going to start saying work optional in 3 to 5 years by Keith Blackborg, and I probably will also say your wealth business more than a few times. That's it's really good. That's your wealth business, right? It's I had a former a CRO, chief revenue officer that I worked with, and he used to say, "Well, this is good for the company. Let me show you how to do X, Y, and Z for this tech company that I worked with." But he goes, "But let me show you something that was probably good for Abel Pacheco Inc." And he would give me those side nuggets, and I was like, "Man, that was so valuable. Thank you very much," because it was more than just making money at work. He's like, "Let me show you for Abel Pacheco Inc." And he was really talking about my wealth business. Let's figure out how to create a better life.
That's great. Seems like a great guy.
Yeah, it was Mr. J. Newman. He was a good guy.
Hello, hello. You're listening to the Five Talents Podcast. I'm your host, Abel Pacheco. If you're enjoying this podcast, then I know you're serious about achieving financial freedom. Are you ready to create your own path through multifamily investing for yourself and your family? Then I know you're going to appreciate our Investor's Guide to Multifamily Investing. It's titled Tackling Commercial Real Estate the Easy Way. We use this guide to invest ourselves in $93 million worth of real estate. So we're going to show you the basic mechanics of multifamily syndications and how to evaluate your next passive investment opportunity. So the best part, if you subscribe to our podcast now, leave us a review and a rating. I'm going to give you a free copy of our ebook. So please take a moment to do that now. Once you've done that, go to 5tcre.com/ebook, 5tcre.com/ebook. Make sure to let us know you left a review, and we're going to send you a free copy. So thank you so much for subscribing to the Five Talents Podcast. We really appreciate it.
Okay, so let's continue this path. Your coaching or mastermind, obviously it's much more than a 30-minute conversation we're having, but at least you're sparking a little bit of interest for somebody to say, hey, I should be working on my wealth business. I need to be the CEO of my wealth business. I need to create not only more income, but a better way of life. So you've gotten that part. So people are taking this information, they're applying it, they're creating more wealth, more seeds to plant in their investing journey. Now, taxes, you're the CPA, right? Give us, just start with the nuggets that, I don't want to mess up the line of questions here. Tell us, what most people miss. Tell us what, the aha moments. Just lay it on me, and then we'll start going down this path, right?
You know what, I could speak probably 30, 40 hours on tax strategy. So I'm gonna pick something that is probably unique to your audience that's going to apply to passive investors, but even syndicators could use
Oh,
as a simple
perfect. Perfect.
example. And this is a way to maximize results. So first and foremost, I love 401ks, and solo 401ks are a way to invest in whatever you want. So we're going to go much deeper than that. I'm sure most of you guys have heard of self-directed IRAs, etc. What I
Mm-hmm.
really love is rollover discounts, meaning I put money in a traditional 401k, and over a few years, I'm getting in $100,000 in a traditional account. And so I've gotten a tax deduction for $100,000. If I were to try and roll that $100,000 cash to a Roth, I'd have a $100,000 tax liability, probably at the highest tax bracket possible. If I don't have state income, I'm already at 37%. If I'm in California, I'm probably over 50%. I've just lost half my money in a rollover from a traditional to a Roth,
Holy moly.
and
Yeah.
it's gone. So instead, let's say you invest in apartment syndication, and the syndicator is able to use this strategy, add a massive amount of value to their investors, and it doesn't hardly cost them a thing. So you invest, I, as the passive investor, invest $100,000 into Abel's apartment syndication.
Okay.
Abel buys it at 80% occupancy, the apartment complex, and he's going to take it down to 60% occupancy 6 months in. So
Yeah.
as a result, we'll say the net operating income is going to drop in half. And as a result, since apartments are valued based on the net operating income, the value of my investment of $100,000 is also going to temporarily drop in value to $50,000.
Okay.
So now I do a rollover of the investment, not the cash, from the traditional to the Roth account at a $50,000 valuation. So if my taxes was previously 37% on $100,000, I'm paying $37,000 in taxes. Instead, I'm paying half of that value. What is that? 18,500 in taxes. So I just cut my tax liability in half as a result. And because I invested with Abel, the value of the apartment's now going to skyrocket at some point in 3 to 5 years to $150,000, $200,000. So had I kept that same investment in a traditional account, eventually I'd be paying taxes on the $150,000, $200,000 withdrawal. Now it's now tax free going forward because it's within a Roth, and I was able to do so at a discount. And so with these rollover discounts, there's multiple things you can factor into discounting in the rollover, but you can often get a 30 to 70% discount on going from a traditional to a Roth account.
All right. So I followed, I think, the majority of what you're saying, and I'm going to kind of go back to make it easy for some people who may not hear the lingo every single day, like you do, right? So at the highest level, right? We'll backtrack at it one. There's the 401k, solo 401k, 401k, whatever. In your retirement plans, you're talking about the difference between pre-tax and post-tax at the highest level, right? One is if you put some money in and the government hasn't taken their piece yet as a investor in your own retirement, then at the very end, when you pull that money out, the government's going to tax it. And so you want that number as small as possible. If it's gigantic, which is like you kind of from a mindset of like, man, I want that number as big as possible. But the bigger it is, the more you get taxed. So what Keith just laid out is a strategy to take a big number, 100K, shrink it down, now tax it, and then make it grow again where it grows where it grows tax free. Is that at the highest level? Did I summarize that?
That's it, Abel. You should start teaching tax seminars. That's great.
Well, I mean, that I didn't know this was possible. So we're gonna have to dig in. Don't go too technical on us, but that's what we do. We put money in, and this is Abel Pacheco when I was 26. I was working in tech. I was the sales guy. I got up to 300K a year. I was finally making some good money. My CPA said, you need to max out your taxes. Max out your retirement plans, fully fund them because the company does a little match. I didn't even realize or think about pre-tax or post-tax. I had no idea. I don't even know which one I chose, but I chose the one where it's like I'm gonna get taxed at the end. So not the not the taxes right up front at the end. And so I just chose that. That's what I started investing with my first syndication dollars. I was not a GP, I was a passive investor. So I put my I moved it 401k to a self-directed IRA, which I think it's smarter to go solo 401k now that I learned, right? But anyways, it's self-directed, and then I put it in there. Now, as it sold, I pay taxes on a bigger amount. You did the exact opposite. So tactically speaking, or like one step down, how did that happen? How do you do that?
One step down as the syndicator or the passive investor?
As the tax strategist, you're advising your clients to do what exactly? I move my
I'm
money.
suggesting if
Yes.
you own a business, if it's just you, no employees, start a solo 401k. There's a bunch of benefits. I'm going to leave it at that.
Yeah.
Solo 401ks over that. If
Yeah.
you have employees, then there are certain providers I work with that can still allow you to self-direct. There's just some extra hoops you have to jump through.
Mhm.
And a lot of people will tell you if you have 401k with employees, you can't self-direct. That's not true. There's still ways to do it. It's just you got to know the right guy who can set this up and make sure that there's the right protections in place for you and the employees.
Yeah. Or you leave an
And
old job. My case, mine and my wife, you leave the old job and now you can direct it wherever you want to, right? Okay, go
correct.
ahead. Go ahead.
And if you don't own a business, but you leave a job, if you can just earn $1,000 doing something, selling stuff out of your garage, you can
Yeah.
start a business. So just something that
Yeah.
looks, feels, and is legit. You
Yep.
just got to earn a small amount of money. Now you can start your 401k. And
Okay.
then from there, you're taking your money out. You're using something like solo401k.com, the neighbors group. They've got a really simple, cost-efficient platform, very easy to use. You can even set up an account directly. I like Solera Bank out of Denver, Colorado, and you send your money off to, in my case, if I'm the passive investor, I'm sending it to Abel, the GP, the syndicator. Abel takes the money. 6 months in, Abel as a syndicator says, hey, I can tell because of I'm watching the deal that this is probably going to be the lowest NOI, the lowest occupancy. We're probably at the lowest point now. I'm going to have a
Yeah.
CPA or an independent third party who values the investment, costs $500 to $2,000 for the investment, for the valuation. But if I, Abel, am facilitating this, I can copy and paste that same valuation and use it for one investor or 100 investors.
Yeah.
So
Yeah. Yeah.
that's where it can be really cost efficient.
I'll pause you right here, just from at least my one layer deep, which is the apartment complex that we're buying. It's 80% occupied was the example that Keith gave, which is very real. It's not stabilized, which is 92. It's a little under occupied, so it's technically 80. The reason it might go down to 60 is maybe we have some tenants that really shouldn't be there. They're not paying rent. They've been skating on the old property manager. No one's kicked them out. They have delinquencies past due, whatever. And now, especially the eviction moratorium thing, I think that just got changed, right? So, anyways, you plan for, as the operator, you plan for your occupancy to even go lower, and then as you start to renovate the apartment units, the interiors, the exteriors, all that stuff, the apartment complex kind of comes back to life. You get in your, quote unquote, the people that maybe have been causing some issues among the other community members. Now you have tenants that are moving in. They see the increase of value on the property, so they're paying more rent. So you're saying at the bottom somewhere, like when I would say as the operator, I would communicate in advance to my investors. Number one, this is a great opportunity for this type of play. So I'm telling them before they invest. And then I'm communicating to them when I think we're at the bottom, 60% before our way up. Is that right?
That's right. And there are actually multiple ways to get valuation discounts, even if you don't
Okay.
have that big drop. Maybe there's less of a discount, but there's still ways. But we could spend a
Okay.
whole
All
hour
right.
just on this topic.
Okay, good deal. Well, we're gonna have a conversation later, anyways. But okay, so I communicate with everyone, and so back to the investor, they've taken their money, a solo 401k, they put it in this, it was already in this post tax. They're not going to get taxed on it, but now they've traded it, lower valuation. How does that part work?
So in the moment that they got the lower valuation,
Mm-hmm.
they approach whoever the custodian is, or I like I said, I like solo401k.com with the neighbors group. Let them know here's the signed valuation by somebody else saying that this investment's really worth $50,000. In that moment, you're going to do the paperwork to roll it from a traditional to a Roth account, and then it's moved to the Roth. It's more of a paperwork thing, and you've got the documentation for the lower valuation.
Yeah. And I still get confused. The Roth is the one where now you're paying taxes on that amount, but you don't have to pay taxes on any of the gain ever, right?
Correct.
Okay.
Under
So
current tax law.
yeah, under the current tax. So everyone understands like you would have had to pay tax on 100K. Now you don't. You only pay it on 50K or the lower number. You pay your taxes, which typically most of us are like trying to defer, defer, defer. This one's like, no, no, no. Take it now because it's the lowest it's going to be. And you take it, and now it can grow from 50 to 100. I could exit an investor out. We've closed the deal 2 or 3 years later. We sold it. I've given them their money back and they have this bigger dollar amount. Now they can go invest that for the rest of their lives and never pay taxes again. So is that right, Keith?
That's right. There's
They
some people who
never
are in
pay
their
taxes again
there's
on
some
that
people who
dollar
are
amount.
40 that have $5 million plus Roth accounts. Maybe they own 40 rental houses. They own a bunch of syndications, apartment syndications. They're never paying taxes again. And in today's rising tax environment, that's a huge, not only tax savings, but just competitive advantage. Imagine if you're not having to pay taxes and all your competitors are.
Holy moly. Like these are things that us as syndicators, myself as an operator, I don't put in our offering memorandum the benefit of cost segregation and depreciation and accelerate. I don't put this in the mathematics because I know there's some investors that maybe are not real estate professionals and they can't take advantage of this stuff, right? But this sounds like regardless, I don't have to be a real estate professional. I could be anyone. And if I just follow the strategy, I can do this. I can pull it off.
Exactly. That's why I picked this one to share. There's a ton of things you can do as a syndicator, way more. Basically, you're given a whole list of leverage to legally manipulate what you want your tax strategy to be. There's guys I've worked with who would be making 8 figures and we'd show zero or negative income. And so really the question was, how much do you want to pay in taxes this year?
Man, what an amazing mindset. So I'm here scrapping for, the difference between 12%, maybe a 12% pref because I think it still is going to be a little lower, which, I'm starting to see more and more. Dave Ramsey says 12% all the time. But in a really smoking deal, 2 or 3 years ago versus today, those percentages are coming out 15, 16, maybe eke out 17. But this is like it doesn't matter at this point. 15, 16, who cares? 12, because I'm avoiding so much more in taxes for the rest of my life on this seed.
True. And if you as a syndicator, if you're in
Yeah.
that seat, maybe you charge an extra 5% of the equity than you normally would to help facilitate this. And it's really truly a win-win for both.
Yeah. 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 Man, that's awesome. It doesn't need to be a 70-30. It could be a 65-35, a 60 or whatever. If you're listening and this is, you're a new syndicator, a new operator, and you're trying to make these deals work. Well, sometimes, and maybe the passive investors get this or not, but either way, what happens is you look at a deal and like, well, I could cut my pay. And if I cut my pay as a syndicator operator, now I can hit your passive investor return. But ultimately, I'm cutting my pay. I'm doing the same amount of work for cutting it. And now this is an additional option for operators to say, well, we could make this deal work in a different way. Let's, hit returns differently. And also this will be a huge tax saving. So man, that's amazing, Keith. That's amazing, brother.
Thanks, Abel.
Cool. So that's one. Keith's got more. So before we go, I know I have maybe a couple more questions there, so I want to talk with you about. But we want to make sure we get how people can reach out to you. So I think this is a good point, right? A good time. If somebody wants to reach out to you for your services, jump in your mastermind, get some coaching, strategy, tax strategy. What's the best place for them to reach out to you, and who do you want to talk to also? You're on mute.
Sure. The best way to get a hold of me is financialjourney.life is my website. I'll give my email address. Please respect it. Keith at financialjourney.life. And I'm happy to connect with really my core audience, my core avatar client are people who are either who are business owners that are looking to sell or maximize the value of it, or they're accredited investors and they're typically have a high income from something else that they're really able to fuel an investment, a portfolio of alternative investments. Or there's somebody who's already got some income, has some experience, maybe looking to syndicate. I'm not the guy that's going to go deep on how to run a certain kind of business. I'm more the guy that's like that independent financial consultant that helps give you the lay of the land and decides what's right for you and all the different resources, the community, what's going to help you go faster, and the tax strategies, investment strategies that are going to really maximize your results. And as a result, that leads to a lot of value for people.
Right on. Thank you, Keith. Thank you, brother. You know where to connect with them, and I would encourage you to do so. And if you do, if you've heard him here, tell him you heard us heard him on the Five Talents podcast. I would be blessed to hear that. And go ping him, reach out to him, and he's got some good insight for you. So what a great individual to have in our network. So thank you, Keith. I hope you get a lot of business from us, and that's great, man. So the one of the things that you mentioned before, you're a tax strategist, not a CPA, or enlighten us a little bit. Tax strategist versus a CPA. This was something that I learned in the recent years, like 2018, 2019, and I, didn't know that. Oh, CPA. What's a tax strategist? So maybe describe it a little bit and tell us the differences here.
So I'm still a CPA. As a tax strategist, though, I'm looking more at the strategy, the overall picture of what you can do, and how do I merge tax strategy with investment strategy, with business strategy? How do I find something together? Often people either aren't thinking about tax strategy, or they're letting the tax strategy wag the dog, meaning they're so focused on tax strategy that they're missing out on business opportunities. And I think tax strategist versus tax preparer. I'm not the guy to just simply take your data and give you a tax return back. That's what most people do. They just prepare taxes. I'd rather help you make history than simply record history. And so with me, I prefer more of an ongoing conversation about what you're looking to do, what you've got going on, and then how do we actually proactively weave tax strategy with business strategy in with like a buy-sell agreement, with things that you're thinking of doing. So it's more of an integrated part of your business, not something that's an afterthought.
Yeah, it sounds like a very active approach versus a reactive. CPA, I would take what happened and help me, finalize, but you're taking a very proactive approach. What's going to happen in the future? Let's help define it and set it up the way you want it to go.
Sure. And so me sharing the discounted rollovers, people can go take action on that. And with people, often I'm saying, hey, you want to do this? I just told you the strategy. If you want help within the implementation, here's 3 guys that I've worked with that will do this for you and walk you through the process. And so I'm staying more at that macro level to really help as many people as possible.
Yeah. I love it. Okay. Well, this is awesome. While we're here, right? Last kind of thoughts, anything that I didn't touch on today? Anything I didn't ask you about that you really wanted to share with our audience? I mean, time is yours. I just want to make sure if there's something you really wanted to hit on and we didn't get to it, please share.
I think my main takeaway is think about first what you want out of life. And once you know where you want to go, then look at the competitive advantage. What do you have to work with that's going to make you go faster? What's your financial resources to work with? Once you know your competitive advantage, what you have to work with, you can pick an investment strategy that's satisfying that you can do in the time that you have to work with the skills you have to work with. And then it's a matter of picking the deal flow that's going to fit you and where you want to go, building the plan then that kind of puts all those things together in a cohesive plan, and then the supporting relationships that are going to help you go faster, the community and network you have around you, and the fact that you're listening to this podcast right now means you're investing in yourself and you're already on that pathway, that journey to maybe wherever you want to go. In my case, I help people get to work optional and identify the most efficient path to get there.
Yeah. All right, baby. I love it. You got to start with the end in mind. You got to know where you're going and what you want, and then you can build a strategy and a plan and a roadmap to get you there. If you don't define the end in mind first, what you first want in life, then the saying goes, any road will take you there if you don't know where you're going, right? So,
and most people never take the time to even do that.
Let's get it on. Well, man, Keith, it's been a pleasure. So appreciative, so thankful that you would join us. I think you're going to provide a lot of value to our listeners, and I know you already provide value to your students, your mentor programs, and the people that are in your world. So thank you very much for dropping a little bit on us today. So thank you. My name is Abel Pacheco. I'm your host for the 5 Talents Podcast. Keith, thank you.
Thank you, Abel.
All right, bye, everyone.
Thank you for listening to this episode of the 5 Talents Podcast with your host, myself, Abel Pacheco. Each week, we're going to bring you interviews from industry experts and commercial real estate investors who follow their dreams and achieve massive success. Before you leave, let me ask you a few questions. Did you enjoy this episode? Did you learn something valuable? Was your mind stretched to what's possible and what you can achieve? Do you want other experts just like the one you heard today? If you answered yes to any or all of those questions, then please take a moment to subscribe to the 5 Talents Podcast, give us a 5-star rating, and most importantly, leave us a written review. Tell us what you liked, tell us your favorite guest, give us any feedback. I'm excited to learn and improve so you can get a more valuable show. So thank you again for subscribing to the 5 Talents Podcast.